Are you dreaming of buying a home but you realize the deposit feels just out of reach? Maybe you've saved diligently for years, cut back on some spending, but the numbers still don't line up. And with house prices continuing to rise, even if you hit your savings target, the goalpost can shift. What you thought was enough may no longer cover the deposit and cost. And if government grants don't apply to your situation, that gap can feel impossible to bridge. Well, you're not alone. Many home buyers have the income stability and repayment capacity, but the deposit hurdle just keeps them from taking the next step. This is exactly where a guarantor loan can make a real difference. A guarantor loan allows a close family member, usually a parent, to use part of the equity in their property as security for your loan. And this can help you avoid lender's mortgage insurance, saving tens of thousands of dollars. It can give you access to a more competitive interest rate. Typically, if you have a lower deposit, the rate is higher. And lastly, moving into the market sooner without waiting years to save a full 20%. We recently helped a client who had $120,000 saved. They'd found the perfect property, but they were still short to cover the deposit and cost. With a guarantor stepping in, they secured the property and avoided lender's mortgage insurance entirely. They moved in with confidence, they kept their savings for furniture, renovations, and daily expenses, and they didn't have to compromise on their purchase. It's important to understand that every bank treats a guarantor loan a little different. Some want full financials from your guarantor, income, liabilities, and living expenses, while others don't need any proof of income, they just need proof of equity. Some banks require independent legal advice, others don't. And if your guarantor already has a mortgage, some lenders allow a second mortgage while other lenders require them to refinance. So choosing the right lender is key to making the process smooth and stress-free. The good news is that the guarantor's involvement isn't permanent. Once you've built up enough equity in your property, the guarantee can be removed, giving both you and the guarantor peace of mind. The takeaway is this: a guarantor loan doesn't change your responsibility. You still make the repayments, but it gives you a real opportunity to get into the market sooner, avoid LMI, and make home ownership achievable. If the deposit feels like a roadblock or you're worried about LMI, don't wait. Reach out today and let's explore whether a guarantor loan could help you step into your first home sooner than you thought possible.
Loan Market. Make it yours.